Welcome to Active Trader Setups Trading Package, Trading and Training Series, Chart and Indicator Setups. This video is looking at futures, cloud, and VPOC indicators, trade anticipated patterns. This video is brought to you by Active Trader Setups Trading Package, a day trader setups company. Be sure to subscribe to our channel while you're here. It's YouTube at daytradersetups.com. This is part of our trading and training series, Chart and Indicator Setups. We're looking at the cloud plots and the VPOC indicators on the charts and learning how to use those to plan exits or entries, and emphasizing looking at futures cloud support and resistance that can be indicated by the longer trend charts, and a definition of the futures VPOC levels. We have an intra-session plot. There's 10 plots on the chart. Goes back 2 hours per indicator, so that's about 22 hours we're going back. And in the daily plots that cover the daily standard VPOC levels that are also carried forward for 10 days on your charts. Before you go any further with this video, I want to make sure you've watched this video, Ichimoku Cloud's Anticipated Trade Patterns. Just analyze the clouds. We talk about a lot of different pattern setups in that video. Please watch that video before proceeding with this video. This video is going to take what we taught you in that video and show you practical application on the charts with the candles in this video. So please watch that first. It's located on our website as well as on our YouTube channel. First, I want to bring your attention to the tradermembers.com website. Everything you see here is open to the public. There's areas that the members have access to, but the products pages on stock charts and future charts are available to guests as well as members. So you want to remember to go over there and look for the information you're looking for on the charts you might have forgotten things about. We have reference series videos on these charts to help you recreate them mostly from scratch. If you needed to add one to a workspace you already had open, we show you how to do that in a little step-by-step video on each chart. This is the 10-tick trader. It's got the chart trader, bar trader on it, the daily VPOC. So this is your 10-tick candlesticks and the daily VPOC. We'll explain to you how these lines are set up on any chart. You see the VPOC plots. You have daily and session POCs, and the color coding is the most recent plot is this larger dash white line. The smaller dash white line, which you don't see on this, we'll see it on a different chart, goes back to the prior day. This is 1 day back, 2 days back. The white solid line is 3 days back. We brought emphasis to those because those are generally the ones that are going to be most in play, especially early session on the ES and the futures charts. Now, as you get into a sell-off, you might want to be looking for a target area, and one of these prior day VPOC plots could be helpful to you. As you can see on this particular chart, early in the session, it kept rejecting this level here, 3010, which was a VPOC level carried forward multiple days. After the third day, the white line becomes an orange line for the 4th through the 10th day back. The purple line is the current day creating tomorrow's white line plot. This is a very small time frame. It's going to be more choppy. The 6-tick, 10-tick is the one you want to look at the most as far as finding the support and resistance areas. But if you're trying to enter trades, you might go to the smaller tick bar to get earlier entry. And this is a 6-tick with our fastest cloud for the shortest time frame of the recent action. You see this setup right here, and there's your This is a session POC, so that's the most recent 2-hour plot, and this one's the 2 hours prior. That's that white dotted line I was showing you, and then a white solid line is in behind here. But you can see as this sold off, when it got to one of these, you get into that sell-off, you want to look back, and maybe there's nothing on the daily chart to help you. Here's a session, 2 session POCs. These are plotted on 2-hour indicator plot, and it's going back 10 bars in arrears. So after, like I said earlier, after the white line is the third period back at 6 hours, then they go to orange, going back for that next 20-hour look back. And you can see when it got right here, you could anticipate may have an issue on this big sell-off. And we're also going to come back and talk about this setup right here on the cloud. Next, I want to bring your attention to the difference in a 6-tick and a 10-tick futures chart, or the POCs, excuse me, the difference in the POCs and the clouds staying the same. This is a 6-tick futures chart with a session VPOC. This is the same 6-tick futures chart with a daily VPOC. So the cloud is the same, the candlestick pattern is the same, but now the POC plots are the most recent daily plots, not session plots. So you can see here, as it ran up, we were looking at earlier, it was hitting this daily POC we talked about on a previous chart. And that's 3 days back, yesterday, and so forth. You also have 10-tick charts with the session POC and the daily POCs on them as well. The cloud will be different resistance levels, like looking at a 2-minute chart and a 10-minute chart. This is a longer term trend. It's set on a different algorithm. It's not using these bars to create the clouds. It's using these algorithms. It's plotted with the white, with the yellow dots to create the clouds. Much longer time frame, bigger trend resistance areas, and the POCs are not on those charts. We have 2 cloud levels. We have a VL and a VLST. The VLST, the ST stands for swing trade. It's a much longer trend than the VL. It uses more bars. It's like looking at a 10-minute chart versus a 60-minute chart or a daily chart. So this image is a VL cloud on the RTY. And this is a VLST cloud on the RTY. So you can see where this was breaking down that day. It broke through this huge resistance area, and then it made a revisit right back to the bottom of that cloud, and that stopped it, and it turned over for a big sell-off. Also, the chart right below here, this is the more ticks that are involved on the chart size. This is a 10-tick creation of these clouds. The more ticks are set, the longer the trend. The chart below is the RTY with a 20-tick setting. So this cloud was created using a 20-tick setting, which made a much even longer trend. And you can see this huge bearish cloud to the right as it rejected it on these bounce attempts. This is to remind you, this is a standard 5-minute candlestick chart with the session VPOCs plotted on it, the 2-hour version that we were talking about earlier, intra-session. And you could change this to a 2-minute value, a 15-minute value, a 30-minute value even. And you can also change these charts, instead of being extended hours, to regular trading hours if you want to look. Of course, it'll replot the plots you could set for the entire session going back, but have the regular session 5-minute chart if you wanted to. And this is a 15-minute chart, but it has the daily VPOCs plotted on it. And again, you can change that to a shorter time frame chart, 1 minute, 2 minute, 10 minute, as you're plotting off these VPOC levels. And a lot of traders will use both the 5-minute and hour tick charts as well. You know, you want to have what you're most comfortable with from your previous trading in view, as well as our clouds and our tick candles. Now we're going to review some patterns. That's a review of the charts that you'll mostly be using. I'm going to take a quick glance at a couple of these just to show you. Here's the cloud. The cloud is resistance, and you have the twist here has already created a bearish cloud. You get the breakdown. You don't want to chase it, so you wait on a retracement. It's an anticipated pattern. You get the retracement, it goes up, hits the cloud level here, which is where we're looking for the resistance, the flip over, and also it hits that session POC level that was plotted from the prior 2 hours. And then it's fighting these POC levels here from the 2 hours prior to that, and it rolls over and you get this great sell-off. This cloud formation, after it all matures, will create the bigger opportunities for bigger moves. This next chart is the same exact cloud but different POCs. This goes to the daily POC on the same cloud setup, so you can see we didn't hit a session POC, but there was a daily level from several days back. It's orange. We know it's more than 3 days ago at $3,003.75. And we don't plot the prices out here on the right-hand side like you're accustomed to seeing with your little black bar. We put it right down here so that you can visualize the exact levels that you're trading against. And you can see when this broke down, it triggered the reversal. This red bar starts when this bar closes, and it's usually 2 green bars back at the lower level. But look what it did the very next bar. It went back. This is just a 6 tick, so this is not very many points. It goes back and revisits this line almost to the tick, maybe to the tick. Does it quite often. And that gives you a great opportunity to step into that trade with a really tight stop. If you're not already in it, if you're already in it, then that's what you're referencing. You're wanting to stay below that level and got your stop a few ticks above that. Just a quick review of these session and daily POC charts to give you some anticipated patterns. This is a session, this is a daily chart. This is going back to the day before, and you can see pretty easily why that plot was there. It's because it spent so much time there the day before. And when it broke down in the previous overnight session, this was early in the wee hours of the morning. This was around midnight. You can see it got back up to the areas from the day before and spent quite a bit of time there, and then finally made another reversal candle off of that and probably spent a lot more time there, and you can see it almost revisited again, and then this broke on out as the session proceeded or continued. This is the data box. If you highlight the chart we were just looking at, this is the intra-session POCs. All those values, all 10 values right there for you on the charts. So when you're looking at a chart, even though you can't see the plots on this session, this is a daily, but on the session one or the daily, either one, you don't have to see the plots on the chart. You can just mouse over your current level and it'll tell you exactly where all those plots are going back. Sometimes some of these will be blank because it don't have enough information coming in on your tick data to calculate that. So on this session POC, if you were highlighting over this area right here, the current bars, it would give you all these values right in that box at a glance. And it starts out with your 3 white lines. Remember, your solid white is three bars back, slightly dashed, and a big dash, and then they go to orange. So you've got those references right there for yourself. You might be comparing them to something else you're looking at. And don't worry about all this information up here. That's all gone. We had that on the charts as we were creating and testing to make sure the plots were where we wanted to. And then we removed all these labels, so we got a clean chart now, like you see here. This is another chart with the daily POC. And you see your cloud as you were breaking up. In this uptrend, you ran into the prior day's VPOC and you rejected, and you gave this little pullback, and then you came up through again, And this is what I meant earlier when I talked about maybe picking an exit or an entry. In this case, look what a great exit plan you had. 3-day ago POC right on your chart for you. Daily POC we're looking at. So when it gave this flag pattern here over whatever period of time that was late at night. And it worked its way back through these levels. The thinner the cloud is at the point that you're trying to cross it, the less resistance it is. If you got a big area, you got more resistance and you're likely to give another pullback. We'll be talking about that in more detail in just a moment. As this broke on up, look what a target you had. And it went right up to that level, and then you reject it. So a great place to exit if you stayed in this trade all the way. That's a multi-point move from around, if you took it right in this area, that's around 79 up to about 92. I want to show you a few actual trades taken off of some of these indicators. This was an RTY micro. We took 10 contracts and we did it on a scale out chart, and it was 3 scale out here, 3 here, and 4 up here. And I actually had so much confidence in the trade, we took and slid the first scale out all the way up and matched it with the second scale out and just combined those two together there. We had a trailing stop, 2 bars back. We know that it takes 2 bars to make a reversal bar close and can create the first bar that we know we got to have to go up. So that's our stop. We know we got to have that to go down. And we're trailing 2 bars back up as this progresses. And we had so much confidence, as I said, we raised the first scale out up to here. We later adjusted this down slightly and then moved this down to this POC area. This was on the daily, right here, the daily indicator or plot for the VPOC was on the daily, not on the intra-session. So this was the prior day's POC. It had sold off, took the POC out, came back, and as you would expect, the Bulls and the Bears had a little mini battle here, and we decided on this flag pattern, if it broke, we wanted to take this long. This is a continuation pattern of that trade as it continued up, and then we tightened up to a 1 bar trail right after we got this wick in this bar. We tightened it up and said, okay, if it wicks it again, we want to just stop out right here. And then shortly thereafter, we moved this down and went ahead and took ourselves out of the trade on the first 6 of the 10 micros, and it did indeed end up stopping right up here. So it's a really good trade. Very low risk entry here. Using the daily POC plot from the prior day. This was 2 days prior here where you could see it had rejected there earlier. That was another great trade setup. As it tried to break up, it ran into 2-day ago VPOC. Again, on the daily levels, we put 10 on the chart for you. You can see 2 of them here, and it got up to that level, tried to get through. Bull bear fight, Bears won, and it sold off a really nice trade from 1571 down to about 1564. This was on a 10-tick chart, and if you had traded this with a 2 bar trail, you'd have never stopped out because it's always above 2 bars back, and it's about 3 ticks above that. So it's a really, really good management tool on our scaling process, our trailing process. So another similar trade taking on the NQ on the mini as this bounced up into prior session, intra-session POC. This would have been the last 2 hours. This would have been the last 4-hour plot created in time, and as they move along every 2 hours, these plots change color. So this was created by this price action here and here, and when it went back and visited it, we shorted it off that. Again, took a 10 micro contract on the MNQ and had already scaled out. Had 7 left in on the trail here, and we had another 3 bar trail about to scale out, about to hit 3 contracts, and another 4 contracts we'd adjusted up to get back into this area. Again, trading a session, intra-session POC on this 4 hours back. This is another trade off of a cloud chart. This is actually on the NQ, so we only took one contract, and it did the dancing in the cloud that we taught in the other videos to expect the flag pattern up here as you were in the resistance area and the congestion area of the cloud there, and then it turned over, broke down through the cloud, and gave a little wiggle right here, and we took that short, and we just with one contract, we're going to try to get a big run out of that. This is the same chart. Get a little clearer picture of what we were talking about back on the flag of the cloud. Came right to the bottom of the cloud, flagged back up, went back up to the white line we talked about in another training video, and the yellow line at that time of that cloud, and that's where it rejected. And we took the trade here, gave it plenty of room. This is the NQ. You need to give a little more room or get on a bigger trailing stop. You see we're manually moving this. We're not close to 2-bar trail here. Just moving it on down manually. Didn't do it on a scale out. Just one target, and we adjusted the target as we went along. This is yet again another continuation of that. And now we have tightened up our stop even tighter as we get close to this area down here. So it's a really good setup. Already had the twist in the cloud that occurred right in this area. As these went up, this twist occurred. As these came back down, we're still in the twist. It already gave us an alert that this was going to roll over, and we took this trade as we come back down through this cloud. And you can see how many points we got there. We got in at 79.20. We're at 79.06 on our stop. So this is down around 79, probably 04, and we were targeting the 7900 area. So that would be a 20-point move. And look back on this chart when we were looking at the teaching video about in the big uptrends, how they'll pull back and hit the white lines and hold, hit the white lines and hold. As many times that'll do that. We were teaching that in the Ichimoku Cloud video. Here you see it again, consolidations at the white line, continues to hold the white line. Finally, tries to break down through it, gets to the yellow line, holds that line, and then gives this huge run on up in the late day on that particular day. That's regular session hours down here. So it's a great example of how the uptrending cloud will hold these levels, and then when it did break down, how it retested this and held there as well. Could have broke on down here. There's no guarantee it's going to hold there, but it did reverse and then gave that big run. It's a very in-depth video covering a lot of material, short-term clouds, VPOCs, trying to get you as much information out in this video for the new members to get a good feel for everything that's in the package, because I know you're overwhelmed when you first start. This is our version of advanced decline line. We run it on a 10 tick and a 25 tick, and we're looking for the trend shift in our projection chart, and we talked about it in the other video, talk about it again in this video. We're using our same trend shift pivot line, exact patterns you expect on a chart for stocks in the ES you find right here on the advanced decline line. So it's setting up for a flip here. This is early in the morning, had probably gapped down, immediately turned. You see at 9:30, gives the pullback, holds the level. That's probably before 9:42, and then chops around and gets going in the uptrend. Advanced decliners can lead you to look at more long bias trades. We also have that on a shorter term chart. This is like looking at a 2-minute and a 30-minute to give you the bigger trend and the shorter trend. This is a good screenshot of putting that to work here. You got the ES is out above this cloud. It's trying to hold the levels, and it looks like it's probably about to fail here. It's sitting on the cloud level, which is out here. The cloud, you can see here, pinched. It did not twist and roll over, but it looked like it was about to. I'd have bet money right here that this is going to break down. And what ends up happening now, it is holding the prior day's daily POC right here. It's really struggling to hold it. It's holding the cloud at that point, which this is out here in this area. It's where that was. But look at what your advanced decline line did along that same time period. This was somewhere between, we'll say 10:30 to 11 o'clock, and right here at 11:04 finally broke through and got a really strong surge. And we actually have one of our other indicators down here on the bottom that's just a visual tool to how strong that move might be, and it gained momentum immediately when it finally broke back up. And you can see the other times it barely had one plot of the algorithm that actually went green, and this continued and got in a strong move, and that's where you got this breakout right here. Now that wasn't a monster move. That was about 3 or 4 points at that point. This is a ES on a 10-tick cloud. You can see again how we pull back right into the cloud level. Out here we've got this is where your blue line is representing the cloud shape. So we're right about here on the cloud at that point in time. And this comes down and holds it perfect, pins it, comes right off of it, gives a really nice bounce there for 4 or 5 points. Trying to keep this going at very fast pace. This is a longer trend chart. We label it that for you. It's not run off. The clouds are not created by our all-wick bar. They're created by our STS Algo Bar, which is a much longer trend bar, makes a longer trend cloud. And you can see that RTY had run up into the level of this right side area over here. Is what that yellow dotted line represented. It pushed on through, got all the way to the cloud here. On the longer trend charts, we highlight this cloud in a dark yellow so you can spot it easier. We also bring in our trend shift pivot zone red and green line, as well as our momentum bars or brackets on this chart, because we got room for them. We talk about those, the projection charting and so forth. So that's a long-term trend chart. This next chart is that same exact chart. You see this is not twisted yet. We still got the blue line down here and the yellow line is up here. So we're still into this cloud shape right here on this side. So we hadn't twisted to be long biased. That don't mean it can't break through. This is a thin cloud. If it broke through, then you would want to pull back and bounce there. And I'd use this in another video. There's a video on the YouTube channel about a 10-point ES move, and we covered some other things on the RTY in that too. And this is a long-term resistance. So despite the momentum it was gaining with our bars, it hit this area and was really struggling here. And take note of the cloud right here had started to fall on the yellow line out to the right at that time. And then here's the same exact chart. It's progressed a little further. The bears won and it's selling off again. Now it's down to the trend shift pivot zone and the baseline of this cloud out here, which could be a support area, but it don't hold. It breaks down through it and just continues on down. Another thing I'd like to show you right here, as this was progressing, now keep in mind this is a bigger cloud chart, but this is the same bars you use, ATS wick bars on a 10 tick as well. And right here it put a wick out the top, and you can see it went up and tested the yellow dotted line, which represents your cloud out here to the right. And you can see the labels on those values for you. This is this one and this is so forth. The pink line is marking the cloud back behind us, and we use the pink line on the bigger trend charts. We're going to go back and look at some more longer trend charts too. I'm just randomly going through screenshots that we made to get as much teaching packed in this as possible. You can see this cloud break down, and this was on a daily POC lines. We break down here. You got this reversal. You see when it came back up, ran right into the prior day's VPOC and fell there. So that'd be a good exit plan had you been long here. Pull back. You see what the cloud is doing over here. Pull back into our white line, test it. It gets back above the blue dotted line, which represents this cloud. As it starts back up, the cloud does the twist along in here, and this just continued all the way up. Now when it got up, what did it do? It ran into 28.94, which was how many days ago? This is the prior day 2 days prior, 3 days prior, and then they turn orange after that. So it's a daily VPOC level, as you can see again right on your chart where it did reverse. I believe this is a different chart. That one's at 90. No, it's the same chart at 94. You can see we got all the jibber jabber off the top of this. This was a 10 tick. This chart is RTY, and I really brought this in. This is the intra-session POC, 120 minutes, 2 hours that these levels are plotted on. So this was the most recent 2 hour, second most recent, third most recent, and then the orange ones go back further in time. But you can see how when this was coming up, of course, this is the most recent plot, so it was created by all these bounces in these areas. But where it was bouncing at here, here, and here was this 15, 28, 30 that was going back multiple hours into the earlier part of the session, at least 8 hours or more, because 2 hours is the white line, 4 hours, 6 hours. So when they turn orange, they're at least 4 plots back. So it's at least 8 hours ago or longer that this plot was put here. Same with this 1525 down here. So that's your session VPOC levels. You can also see when this finally worked its way through the cloud, gave the last retreat up here into the level, it broke down and there's no cloud left, so now it's got lots of room to run. It's another VPOC, daily VPOC plots on here. We got a cloud on the 10. It's a very choppy day on the ES. Yesterday's VPOC, it rejects, comes back down, working through the, fails down through the cloud, doesn't hold, breaks back up, fails a VPOC again, keeps chopping, or a lot of chopping going on here when you get multiple wick bars. A lot of more chopping here, consolidating, and finally breaks up. It got the twist by that time over here on the cloud, and it finally broke up, picked up some volume down here as well, and then we had a pretty good breakout late in the day. It's about 2:15 in the afternoon. This is several days later, same daily POC chart. It's consolidating and chopping down below this cloud level that's right out here is what the yellow line is telling you. So you know it's got resistance here. Even if it gets through here, it's still got to get through this next level on this bearish cloud that's never made a twist yet. And it gives way, sells off. This is around 1 o'clock. Makes this sell off 4 or 5 points here. Does catch a reversal candle and runs right back up into your cloud again. So again, if you're in a trade, it gives you place for hesitation, and then you can see how much time it's spent here. Well, actually, it wasn't a lot of time. This was at 2 o'clock. It gave a whole lot of stuff, so some kind of news report was probably out on this day, and it gave a 2 o'clock in the afternoon. Gave this quick reversal, quick sell-off actually there too. So this was going on at a news report of some kind, probably something to do with the feds, chopping around, does all this chopping all in 1 minute, and then finally breaks away from that. So with our bar chart trader, if you wanted to trade this craziness as it's going down, I don't think you could have traded this one, but you could have traded this one. Best thing to do is walk away. This was the same chart that continued up there. It came back down, held the POC, and they reversed it again. Now it's maybe settling down more, because keep in mind this was 1 minute. This was the next minute back down. Come right back into your POC. Maybe it's calming down. You got the cloud in your favor. That's when you click your bar chart trader. It says give me a long trail when it's coming down, and when it reverses, you got the long. You're in it instantly. We're going to be talking more about long-term charts again, like we looked at the RTY earlier. Remember, they have the pink line on them where we extend this cloud out to bring it to your attention, where this would come up and flatten out again, showing this line further into the future. Longer-term trend, we want to keep it in sight and in view to bring attention to it as you approach these levels. But this is a long-term 10 STSAlgo longer term cloud, and you can see the choppiness from the night before. This was when the session started. Spent quite a lot of time there. It's about 4 o'clock in the morning, and it started to break up. Still at 4 o'clock in the morning, 4:30, something like that, and broke out here. The main reason I want to show you this chart, it's got our trend shift indicator on it, which is not as clean on a futures chart as it is on a stock chart, but I wanted you to see this area right here. When you can get our algorithm plot to break above our power MOBO band, it's a really strong move. And when it gets in that move, as long as it's staying above that level, you're going to probably continue up. It's very strong. We also got something we don't talk about much, is this edge indicator. It's really hard to get it green on a futures chart. And when it goes green and you can get this breakout, it may run a long time. And this was a pretty big run through that overnight session up into the early morning or regular trading hours on that day. Now, when this continued to go sideways and then start all this choppiness, that ended up the whole day up there. This is the next session on the 19th. A lot of chop. It went down into the cloud like it might have wanted to break. This was done got regular hours at this time. It held the cloud. That was the right side cloud that was trying to make this move up. Hadn't twisted yet and broke back out. So it's a lot longer trend cloud, and it was showing a lot of choppiness that was going on, but you can see that it held the levels. The main thing I want to point out was this strength here. When you get our MOBO bands turning up and our lower ones staying blue at the same time, as long as this is staying blue, this was going to stay blue, of course, then your momentum is not stopped yet. And the harder you can push this lower band down, the stronger this move is going to be up. This is not a longer term trend chart. It's actually a short term 6 tick, small bars on the ES, but it's in a real big uptrend, and you got this cloud just going up, going up, going up. It's got the daily POC on it. I mainly wanted to just show you in this big uptrend. First thing it did, it consolidated here at the session open overnight, and then it finally broke out. About the first hour, it was holding the cloud level, and then it broke out and gave a really nice run. You got this little tiny flag pattern back down over. This probably took over an hour, but it held the blue dotted line, which represented the cloud out here. Here's the white line down below it, and then continued on up into after midnight and continued all the way up into the 4 a.m. area. Mainly wanted to show you this flag pattern. We got the breakup after lunchtime. This was already there. Excuse me. This was not there. This white line was drawn from this point on because it represents the prior day's POC. This is your day break. So this line was not there. Probably was created by this price action right here. But you had this run up during the day, and you see it got to the bottom of the cloud, and it got in trouble there. So immediately started having trouble there within a couple of ticks off the bottom of that cloud. It pulled back, in our white baseline that we talk about in our other video that's creating these clouds out to the right. It held that baseline, and then right about here as it consolidated in the cloud, we expect issues here many times. It was holding the right side. Yellow dotted lines, this line right out here, it's holding that cloud, and it's twisting around, giving you a long indication. It breaks up and gives you a little run, and then it gets into choppiness again to the end of the session. So a sample of a daily POC, no cloud, just the POC levels on it. This is in the overnight session to where we broke up right after they opened, and it ran up into the prior day's VPOC. That was the prior day all the way back, and then that's for midnight. And it came down from there. This trend line here ended up setting up another trade, which is on this shot here we made. This is that same chart. That's your trend line. As it broke down through the trend line, and then it turned through the night and just chopped and chopped and chopped around. The next morning, very early, it ran up really hard right into the trend line and rejected the trend line. This is early regular hour session, gave a quick reversal, and when it did, this is a micro trade, just 3 contracts early in the morning on the daily VPOC chart, same chart we were looking at in the overnight session. But look back here what it was doing on the cloud at the very same time. First of all, where it held on the sell-off in the overnight session, ran into the bottom of the cloud behind it and held and went right back up to the bottom of this cloud. We expect a reversal there. You got this reversal lining up with the bottom of that trend line. That's like a no-brainer. So we picked this up on this short. This is a short 6-tick chart. So a few bars down, we don't get it right at the top, and gave a pretty nice trade here on that. Our next video, just to highlight what we're going to be covering in that, is we're going to take this multi-time frame layout that's showing the longer term charts and the shorter term charts. We got the 6-tick, we've got a 10-tick with the daily VPOC, 6-tick with the session VPOC, and the longer term trend still on a 10-tick just like this, but a longer term trend chart. It's where we can show you how they interact together. We're going to just walk through a lot of charts. This was where the ES was sitting right prior to open on the prior day's chart. This is the overnight session right here, sitting right here at 9:30 in the morning when it broke up, right when the market opened. It has sat there for about 2 hours, right on top of this, already twisted, nice big cloud out here. Here's the yellow part, here's the blue part. It's ready to go, and it triggers off the open on the regular session, gives a big run up. And also look back on this lower chart back here. At the same time, you've got this longer trend chart that's got this cloud out here on the right. It's right about here at that time, and it's sitting on that cloud, and it breaks up. And what happens? You got your yellow dots broke through the MOBO, and you got that strong run that I talked to you about just a few minutes ago, looking at this longer term trend chart as guiding your way to stay in this trade. And what we're going to do on this next video is we're going to highlight everything I'm showing you here, as well as we're going to go back and just watch the price action interact just as I've been teaching you with these clouds on actual candles. You can see right there, went up, failed. That's the setup you're looking for right after the twist. You can see the bounce, couldn't get through the white line. That's forming this cloud out here. This is a 10-tick. This is a little bigger trend. You don't want to trade off the 6-tick. You want the 6-tick maybe to be your getting in part, but let the 10-tick guide you. See right here on this sell-off, you've got the consolidation and all the choppiness goes down, test the bottom of this cloud. You've already had the twist. You got the nice big cloud over here. Here's the blue line right here. At that time, you get that great bounce off of there. Really nice move. And we're just going to show you how this interacts with everything we've been teaching you. Here again, you got a nice pullback. Still got a bullish cloud. Holds the cloud area. The white line's right in there too. Plan your trades. Look at this one. Big sell-off here. What do we teach? Don't chase it. Wait on it. I bet it'll bounce. Goes up. Doesn't hit the bottom of the cloud. Goes all the way to the yellow dotted line, which represents this cloud right over to your right at that time. So when that's happening, that's what you're looking at on that cloud over there on the right-hand side. It just went negative. It goes right up there. Looks like it probably printed it to the tick and then turned around and broke right back down. So we're going to spend a lot of time reviewing futures charts in this manner, and mainly I want you to be watching over here on this lower left-hand chart how these moves like this is your trend shift, breaking down below. We can scan for this too. We can scan for candles below the green line, which means it may be setting up to turn it red and shift the trend. And that's exactly what you're looking for. It's shown right here that we broke down below the trend shift. It should be red, but it's not. So since we're below it and it's not red, we're anticipating it turning red. And what we want to find is a retracement to it and then get a nice setup. And that's exactly what that big trend chart gave you there. Right there, gave you that nice setup. And look up at this cloud right up here. When this was coming up, I got to get back over there to it. It moved on me. Right here. Look at your upper right hand corner chart. So you've got the trend shift alert that it's wanting to set up for the rollover. And right when it did, that upper right hand chart went right up to that cloud line we were just looking at. So you got two charts in sync. Long-term trend chart in sync and short-term trend chart in sync. Right there on that bar right there. Also look up here what you're doing. You're failing this as well on the little 6 tick. It all syncs up together. When you get it all sync up together, you can make yourself a great trading plan. Thanks for watching our video. Watch for the next one. We'll do a lot more looking at what we're looking at right here just on the futures. Thank you very much. This video is brought to you by Active Trader Setups Trading Package, a day trader's setups company.